Phil, let's just start from a macro perspective and maybe focus kind of what we're seeing in the market more on the tech side, more on the companies that are listed on the Nasdaq. That's been a huge part of the market's enthusiasm in the last few months. What, from your vantage point, kind of explains maybe what's exactly happening right now in markets?
Yeah, I mean, those new economy stocks have been driving the markets up to the levels that we've seen. If you actually look across the spectrum of the market, not all the companies are going as well as a lot of the tech companies are. But it makes total sense when you think about what we're all doing. We're sitting at home, we're working from home, we're watching more Netflix, we're doing Zoom calls, we're looking for vaccines. So all of those companies are doing quite well. A lot of the other companies in the market aren't doing quite that well. And the sort of difference between the performance is very much related to whether the companies have had to shut down completely, shut down 50%, or are doing really well out of being in a unique position to benefit from what coronavirus has brought to the economy.
Phil, Dan Roberts here. Let's stick with the big tech names. And specifically, I know in your notes to us, you mentioned some of the recent bankruptcies announced in retail, Lord & Taylor, Men's Warehouse. So maybe RIP Joseph A. Bank, or maybe they'll just shrink that number of stores. But there's such a contrast there, isn't there? I mean, on one side, you have companies that, well, they weren't doing well before the pandemic came along. And let's keep that in mind. And the pandemic just added insult to injuries, and in many cases might finish them off. And then you have big tech, which just soars regardless of those hearings, regardless of the antitrust concerns. I mean, what do you make of that widening gap? And in the retail names, was that just inevitable? And might we see that surge for the tech names slow down? I mean, how much longer can these names soar like this?
Yeah, I mean, it's an interesting question, isn't it? Will we be changing the way we work forever? Or will we get a vaccine in sort of first quarter next year, and by second quarter we'll all be back to normal and we'll forget about coronavirus and we'll be catching planes and taking vacations and staying at resorts again? And that's the really big unknown. If you look at some of the like small economy or the old economy stocks, they're not going to zero. So a lot of people still have a lot of faith that we will come back to normal. But as we see the second wave coming through a lot of Asian countries right now and Europe, and we see the extension of the cases in America, you're starting to realize that it's not going to be a V-shaped recovery, and it's going to take a lot longer to get back to normal. I mean, China is kind of proving itself to be an exception, not the case study at the moment, where its GDP is back to positive. The rest of us look like, as we see new cases, we're going to have to go backwards before we go forwards again, and that's slowing down the growth, it's slowing down re-employment, and it's slowing down a return to normalcy. But I do think we'll eventually get a vaccine and we will return to normal. So those companies, we just need to make sure that the government can support those companies through this, because this is not normal. You can see that in the data, and we all know it because we've never lived through it before. So that when we come out the other side, those companies are still available for us to go and shop at and do sport with and just do all the old things that we used to do and enjoy a lot.
Hey, Phil, I wanted to ask you about what you were just saying, just in terms of the timing of the recovery, because when we're talking about the pace of the recovery, obviously that has been up for debate. But from your forecast and the data that you're looking at, what do you think is the most important data points to watch at this point in order to determine the pace of the recovery?
Yeah, I mean, one thing that we've seen over and over again is when you see a spike in cases, you see people's behavior change. You see spending reduce, and you see that trickle down to employment. It's one reason why this week the expectations for employment are not that great, because we've seen the spike in cases in the southern and western states. We're expecting a lot of companies have gone backwards and let people go again. And so you kind of see that the recovery is being slowed by the new cases. What we need to do is either have a vaccine. So that's one thing that we're obviously very focused on, is the progress of this third phase studies in the vaccine side, but also to learn to deal with COVID more successfully so that you can isolate cases quickly, quarantine smaller parts of the economy, and keep the rest of the economy going. And then I think you can look at some of the European countries already. They're back pretty close to normal levels of spending, even though not every company is back to full production capacity. So it's not equal when everyone gets back to normal, but it's got back to normal because there's a much lower risk of coronavirus and people's behaviors have got back closer to normal as well.